Good morning, everyone.
Hello, hello, hello. Welcome, welcome. All right, let's give a sec here for folks to be able to jump in. Looks like we got some pretty good participation today. That's good. So why don't we start with a couple housekeeping items? Why don't y'all let us know where you are, what state you are in, and what year your student is graduating? Are they class of 26, a senior, like class of 27, class of 28? I'd like to get a sense of who's on these webinars. All right, we got a 27, 26. It's another 20, 28. Okay, sophomore, 27, 29. There you go. I have a 29 myself. I have a ninth grader, so she's sleeping, of course. All right. Oh, Georgia. All right. I'm in Georgia as well. So, okay, very good.
You know
Well,
what, Jason? We should share. Guys, this is, I think, our first Saturday morning presentation.
oh,
So we
that's
really
true.
appreciate you guys joining us. And I guess we'd love to hear if you like Saturday mornings.
Yeah,
Uh,
that's a good question.
yeah,
I still have coffee in here, so that's good.
me too.
All right. So good. All right. Looks like folks are coming in. So a second piece of housekeeping before we jump in is we're going to give you a high level view of some important stuff on financial aid in these complicated cases, these what we call special cases for financial aid. But if you have specific questions, if there's something unique or specific to your circumstances, we'll do our best to try to help you with those in two ways. One is if you drop your question in the Q&A, we can try to answer it during the webinar today. But it's really important that you put it in the Q&A, not the chat. Okay, it's really hard for us to keep up on the chat, and it's a goofy way to answer questions because you can't reply directly to the questions. It gets all messed up. So please, please, please put your question in the Q&A, and we'll try to get to those. But the second way is a lot of these involve personal things with finances and so forth. You don't want to ask questions about that in public where everybody can see it on the webinar. So we're happy to offer you, everybody on the webinar, a free 15-minute consultation where we can try to answer questions for you. And if you want to talk about getting help, beyond just the webinar and our platform, if you want some help from our services, we're happy to chat with you about that and so forth. So the second way you can get some help for your specific circumstances is to book a consultation with us. So when we get done with the slides here, the informational part of this, we'll have a QR code and a link at the end where you can book a free 15-minute consultation with us. And we're going to be there today, right after the webinar is over, for several hours. So if Saturday is good for you and you got the morning cleared and there are no good football games today, trust me, I checked. There are no good college football games today. Maybe LSU Alabama is the only one, but so if you want to book a session, a consultation with us today, we will be available to you today. So all right. So having said that, oh, we forgot to introduce ourselves. We always do that. We just
It's
start
a Saturday. It's a
just
Saturday.
yeah. Okay, I'll start. My name is Jason Slone. I'm one of the college funding experts here at College Aid Pro. My background is I spent a long time in higher education. I've been a professor since 2002. I still teach classes. And I was a dean for 7 of those years. So I always joke I'm the former dean that spills the beans. Also been a financial advisor since 2008, and since 2019 have been specializing in college funding. And I got into this selfishly because I'm most importantly a parent of three myself. So when my oldest kid started looking, I took a deep dive into this college funding space and learned all this important stuff. And I was like, oh my gosh, all the parents out in the world need to know this stuff. It's super helpful. So really love being at College Aid Pro and all the good work we do helping families on this stuff because it's confusing, stressful, expensive, and I live in Savannah, Georgia, so that's me. Murph, tell me about
So we were just comparing. I'm in New Jersey, and we were just comparing how lovely it is in Savannah and how cold it is here in New Jersey. But that being said, and we're lucky to have Jason. He's amazing at what he does. So that being said, I'm also one of the college funding experts here at College Aid Pro, right? Specialize in financial aid. I got into this from financial services and really fell in love with this side of the process. In financial services, a really good way to meet families is, of course, you have to help them with college. But I just really ended up liking the college part. So that's all that I've done. Fortunately, I've worked with a lot of families over the years, and I've pretty much seen it all. But yeah, enough about me.
Yeah, Murph is absolutely fantastic.
as are you.
I'm definitely in the top two on our team today. That's for sure. So, all right, enough of that stuff. Why don't we jump in and share screen and get going on the information today?
Do
So, for
it.
those of you who don't know, we're College Aid Pro, and our mission here is to help end the student debt crisis. That's hugely important to all of us. And the way we do that is try to empower families to shop smarter for college, to understand how financial aid works and all that kind of stuff, because we believe you should be able to give your kids a good college education, but not be buried in debt in the process. So, all right. So step one, where do we start? If you're not sure, especially if you have younger kids, ninth or 10th grade, you're not sure where to start. We always say step one is set up a free MyCap account. Okay, My College Aid Pro, MyCap. And as you'll see, it's going to be incredibly helpful. You put in your kids' information, their GPA and test scores and that kind of stuff. And then some basic financial information that you're going to have to put on the FAFSA later. And then our system will project out how much financial aid you're likely to get at different schools. So you can put up to 3 schools in your free account, and you'll see that project out grants and scholarships, all that kind of stuff. And you can even get an unlimited premium subscription for $5 a month, which is pretty amazing. You can search every college in the United States. It'll tell you if your kid's going to get a scholarship or you're going to get a grant or whatever. So if you don't have a free MyCap account, make sure you set one up. Just quick clarification, each MyCap account is per kid, not family. So if you have 2 or 3 kids in high school or whatever, you're going to have a couple of different MyCap accounts with different emails. So that question comes up a lot. All right, so let's jump right into the informational part of the webinar. Let's start with a very basic question, but a really important one, which is, what is financial aid? Okay, you hear that term financial aid all the time. Well, the way we explain it to parents is financial aid is a discount off the sticker price. Okay, we say the sticker price. What that is that's the cost of attendance. And when you start shopping for colleges, you're going to see these crazy, huge, expensive cost of attendance, these huge sticker prices, $90,000, $100,000, $70,000. Importantly, that's all in, that's everything. So make sure you know that it's not just the tuition, but that's your dorm and meal plan at the cafeteria and books and fees and travel and health insurance and everything, right? Cost of living. But the reason why we say sticker price is because you need to think about this like you're going to buy a car, right? And you go and you see the sticker price on the car, and then you come out and you haggle with the salesperson and you get the cost down. That's what financial aid is. Financial aid is a discount to the sticker price to bring it down, okay? But more specifically, there are different types of financial aid, and only a couple of types bring the sticker price down. So let me explain that. So there's 2 types of financial aid that are free money. One is need-based grants. So if you see the word grant, that is money that you can get based on your financial needs. So it's free money. It's awarded based on your family's financial situation, and it's a discount. It brings the cost down. The second kind is merit-based scholarships. So this is free money, but it's awarded based on your kid's talent profile, their GPA, their SAT score, or their ability to throw a football on Saturday, those kinds of things. Okay. And by the way, scholarships are independent of need. So we'll talk about that a little bit in a second. But both of those are great. You want to get as much of that kind of financial aid as possible because it's free money and therefore it's a discount to the sticker price. Now there is a third type of financial aid. It's called self-help aid, and it helps you pay the bill, but it's not a discount. Okay. And that's loans and work study. So work study is exactly what it sounds like. That's a job your kid can get on campus. They work in the library 10 hours a week, they get a check. And that can help you pay the bill, but it doesn't bring the cost down. It's not a discount off the sticker price. And of course, loans. You can get student loans, you can get parent loans. And loans help you pay the bill, but not only is it not a discount, it's adding to the sticker price. It's adding to the cost of college. So our goal at College Aid Pro is to help parents minimize loans because loans can do a lot of damage. College is already expensive. If you pay for college with loans, it's going to be even more expensive. Okay. And so the goal is to get as much grants and scholarships as possible. So how do you do that? Okay, let's talk about the grant side first. So grants are need-based financial aid. So you have to figure out, are you going to be eligible for need-based aid? Well, there's actually a simple way these colleges determine this. They have a formula. So they take the cost of attendance minus what's called your student aid index. That's a key term in your jargon. Student aid index, or SAI. It used to be called your expected family contribution, or EFC if you have older kids or when you went to college. but they've changed the name. It's basically the same thing, though. It's the student aid index. And this number is a ballpark of how much they think you can afford based on what you report on the financial aid application forms, the FAFSA and the CSS profile. Okay, so we're going to talk more in depth about this here in a second, but you're going to file the FAFSA, you're going to file the CSS profile. These are applications for aid, and they're going to ask you to report your financials. Based on what you report, it spits out this number for your family called a student aid index. Okay, so the difference between the cost and your SAI is how much need you qualify for. All right, so if a college costs 90 grand and your SAI comes back at 50 grand, you qualify for 40 grand of need-based aid. But very, very, very important, if no matter how much need you qualify for, not every college meets your need 100% with grants. Some do, some don't. Okay, so you need to know that as well. So let's say you're qualified for $40,000 of aid, but a school only meets 50% with grants. The other 50% of need will be met with loans. So this is where it gets pretty complicated. But when you're shopping for colleges, and we say that on purpose because this is a big investment. It's like shopping for a house. You're going to need to know how all of this works so you can be an informed consumer. And MyCap can help you with this a lot. Okay, so if you put in all your information, MyCap will calculate this for you. So the important number, of course, then is your SAI. Okay, and you're probably wondering, well, how does the SAI get calculated? What do they look at? Well, basically, what happens is they look at your assets, what you own, and your income, what you make, okay, what you earn. So let's talk about those two things. On the asset side, most assets count, but retirement assets don't. Okay, retirement doesn't count. In other words, if you have money saved in a 401k or a IRA or something like that, 403b, 457, whatever, that's not going to count against you. But if you have money in a bank account, cash savings, a brokerage account, a trust, real estate, we're going to talk about here in a second, those kinds of things, that will count. All right. So they're going to look at that and then they're going to say, well, a percentage of what they have can be used for college. And here's what's really important is who owns the asset. If it's a parent owned asset, okay, if it's a parent owned asset, they think about 5.64% of that can be used for college. So let's say you got $100,000 sitting in the bank in cash. They're going to say, well, 5640 goes towards the SAI because you can spend of that 100 grand you got saved, 5,640 should be used for college. But if it's a student-owned asset, it's 4 or 5 times worse. Okay, so if your kid's got an account and it's got 100 grand sitting in the kid's account, they're going to go, yep, 20. Some schools are 20% of that, so other schools are 25% of that should be used for college. So in other words, a student-owned asset drives up your SAI artificially, even though it's all family money, depending on who owns the account. That's how goofy the system is. Now, in terms of real estate, the type of real estate matters. Okay. So if you own your own home, it's your primary residence. Some schools count that, some don't. If it's a rental or vacation property, all of the schools look at that. And if it's a rental or investment property, in some ways, it's kind of the worst situation from a financial aid perspective because you get dinged twice. You're going to get dinged on the equity that's in the value of the home and any rental income that's produced. Okay. So if you have younger kids and you're a real estate investor kind of thing, you might want to talk to us about, strategies around minimizing the damage from owning real estate. Okay, there's some things you can do. Now, importantly, when you report your assets on the financial aid applications, the FAFSA and the CSS profile, it's basically a snapshot date. In other words, they just want to know what's the date, what's the value today. So if you file your FAFSA on October 15th, whatever it's worth on October 15th is what you're supposed to report. Okay. So again, for you, for parents of seniors, if you haven't filed your FAFSA and CSS profile yet, you still have some time potentially to move things around to get your SAI down. Again, because that's the whole goal. You get your SAI down, you might get more financial aid. If you're a parent of a junior or a sophomore is even better, as you're going to see why here in a second. If you can start in your junior or sophomore year, you have a lot of planning opportunities to get things you can do financially to get your SAI down to qualify for more need-based aid. Okay. And yes, freshmen and sophomores, this is a good time to start. And here's why, because of the second part of this calculation, which is income. And this is a goofy thing, but this is how it works. They actually, whereas they take the assets, the value of the assets on the day you file, they take the income from the prior year of college. So in other words, If your kid is going, let's say you have a senior this year, your kid's going to college next year, which is 2026. So you're filing your application for aid this year, 2025. They're going to ask for your most recent tax return, which was last year, 2024. So if your kid's going to school in 27, this year, 2025, is the year that determines how much financial aid your kid's going to get in their first year of college. Okay. So you've got about, you know, 7 weeks left to deal with that, potentially see what you can do to maybe get your AGI down or whatever, because the key metric is the AGI, the adjusted gross income, which is line 11 on your 1040. So if you can get that down, you can get more aid later. And again, if you're a parent of a sophomore, a class of 28, this is the year for you to start, because next year is your base income year for financial aid purposes. So you want to make sure you're doing everything right, to get the most financial aid possible. All right. Now, if your kid has a job, they do allow an income exclusion up to $11,510 on the FAFSA. At least this year's what it is. Anything above that, the earnings would count. So say if you're a business owner and you're employing your kid, you want to pay attention to that number, because anything above that gets assessed at 50%. So, all right. Now, what if you don't qualify for need-based aid? We get this a lot. We make too much money, or we own too much real estate, or whatever. Our business is worth too much. Um, well, that doesn't mean you're out of luck, because remember, there's two kinds of financial aid. There's need-based aid and there's merit-based aid. All right. So one of the things you could do is focus on merit. Focus on merit schools that give a lot of scholarships. Because as you'll see, if you work in MyCap, some schools do a great job on grants, but don't give any scholarships. Other schools do a good job on scholarships, but don't really give a lot of grants. So you can adjust your building your college list according to financial fit for your family. Okay. And so you need to figure out which schools give scholarships and which one are going to give your kid lots of scholarships. And, the subtext there is avoid schools that won't. So if you're a high income, high asset, high student aid index family, and you go to, schools that don't give any scholarships, you're going to be full pay. And this is a school by school basis, but the most common example I see of this are the Ivy League schools, or the NESCAC schools, the small colleges up in New England, the Bowdens and the Mount Holyoke's and those kinds of places. I see this all the time, and it breaks my heart, where you have parents who are doing well in life, they've worked hard and they're successful. Their kid is working hard, super successful, 35 ACT, 4.0 GPA, started a business, like incredibly successful kids, and they get their financial aid offer from Princeton or Yale, and they're full pay, and they're like, how can this be? My kid's got perfect scores, they should get a giant scholarship. I'm like, oh, you applied to the wrong types of schools. Those are the types of schools that will not give scholarships. Okay. And so just you need to be aware of that as you're going through this building a college list, if cost is a concern.
You know what? I just want to add to that because I think that's such a good point, Jason. And I know that this isn't necessarily an admissions webinar or a list building webinar or anything like that, but in some situations, right, depending on your income, depending on your asset, depending on your college budget, the most important thing you can do is pick the right schools. And for anyone on the call today that has a 2027, 28, 29, it's really important to do that before your student falls in love with
Oh,
colleges
yes.
and before you spend weekends touring and thousands of dollars, traveling to different schools. You want to get that figured out ahead. And right, you do want to figure out like what can you do, or we're obviously talking through all these things, but what can you do to lower your numbers and qualify for more aid? But at the end of the day, the school list is also really important.
Hugely important. Can't
Yeah.
stress this enough.
Yeah.
Yeah. And, I always joke I'm the former dean that spills the beans. I've been in this business for a long time. I taught at Dartmouth. And I will tell you, parents, and I tell every parent that's willing to listen to me rant about this, there's not much difference in educational quality and outcomes between an Ivy League and an in-state public or a small liberal arts college, other than the sticker price. I call it the Chivas Regal effect. I don't know if you've ever heard about that in economics. Chivas Regal was this mid-grade whiskey, and then everybody's like, it's just okay. And then all of a sudden they like doubled and tripled their prices, and everybody's like, oh, it's the best whiskey ever. It's top shelf. And I think that's what the Ivy Leagues do. They charge 100 grand to make themselves look better. Anyway, enough of my rant about that. If you are going to go after merit scholarships, one of the things we always recommend is apply to competing colleges, because these colleges are competing with each other for good students, right? So if you have a good student, you can use that to your advantage. So I'll give you a personal example. I went to a small liberal arts college in Ohio called College of Worcester, and Worcester does give merit scholarships. They're trying to attract bright kids. I got in because I played baseball, not because I was super bright. but they're competing with, say, Denison University or Kenyon College, Ohio Wesleyan, Allegheny, those kinds of small liberal arts colleges in the Midwest. And so if your kids wants to go to Worcester, which they should, because it's the best college in the country by far. I mean, I'm not biased at all. You might also want to apply to Denison, Kenyon, Allegheny, and then if Allegheny gives you a bigger scholarship, you could go back to Worcester and say, hey, that kind of thing. So, okay, and this is the reason why, one of the reasons why you should submit the forms, even if you don't think you're going to qualify for need-based aid. I just had this conversation with the family yesterday. They're like, "This is a waste of time."
Should. You said shouldn't.
Oh, I said
Should
should.
submit.
Sorry, should. I'm going to go back and edit that in the recording. That's super important. Boy, glad you got me. Should submit the financial aid forms. Okay. Yeah, as I was saying, a parent yesterday asked me, why do we even do this? It's a waste of time. We're not going to get any money. I was like, well, first of all, you don't know that. You might qualify for need-based aid and don't realize it. We see this a lot. We see families make $200,000-$300,000 and still get need-based aid at some schools. Number two is you're going to need it for merit aid. So if your kids, even if you're not going to get need-based aid, but your kid's could get a merit scholarship, those schools want you to file the FAFSA and the CSS profile. And if you don't file it, you might not get the scholarship. Number three, it might be your only chance to get aid. And what do we mean by that? So some families are like, well, here's what we'll do. We won't apply for aid in year one, and then they'll let our aid kid in because we'll be full pay. And then in years 2, 3, and 4, we'll apply for aid. We'll trick them. I'm like, no. The colleges are onto that game, right? If there's so many colleges where if you don't apply for aid in your first year, they're like, no, you can't do it in years 2 and 3. You can't play that game where it gives you an admissions advantage, and then now all of a sudden you want money. And then the fourth one is the reason for why you should submit your financial aid forms is for appeals. Okay, we're going to talk about appeals at the end of the webinar today, but an appeal process, appeals are a very important part of the process. It comes at the end in the spring of the senior year, but that's when you go through the whole process, you submit your forms, and then these schools make you offers for financial aid. You can appeal those offers and get more money. You're basically negotiating. Again, talking about sticker price, negotiating with the salesperson on a car. You can do that at a lot of colleges and get the cost down. But you can only appeal if you file the FAFSA and the CSS profile. Because if you don't have an offer to appeal. So you have to file those for appeal. And then lastly, if your kid's going to if you're going to take out any student loans, the only student loan your kid can get without you co-signing is the federal direct student loan. It comes from the federal government. And that's the only loan a kid can get in their own name without you being on that debt. Okay, anything above that, it's gonna have to be a parent loan. So if you're gonna need some loans for college, or you want to use loans for college, so your kid has some skin in the game, and they're gonna take out that federal loan, you got to file the FAFSA to get it. All right, so hopefully that's a good high-level view of financial aid. We're gonna shift gears and give you a little tip. Talk about the FAFSA and the CSS profile, and then we're gonna dig into these complicated cases so you can see how it all fits with the whole financial aid system in general. All right. Do you want to switch gears? You want to
Yeah, sure.
switch
You know what? I
roles?
just want to spend 2 minutes, if it's okay. Can I screen share?
Oh, yeah, of course.
Because we had a question come in about is there a list of merits, and
Mm.
merit scholarships are so specific to your student and so specific to the school that I personally wouldn't use any generic lists. What I would suggest doing is we already put the link in the chat before, but go and create a free MyCap account. And right when you create the MyCap account, you'd be able to see based on your students' GPAs and test scores what colleges will actually cost you. But then in addition to that too, you can see what you qualify for from a need-based perspective. I think for business owners, for divorced families, for complex situations, the tough part about the situations is knowing like how do you value your business, or who's the primary parent for the sake of financial aid. And that's obviously something that we could support you with and kind of talk you through, but that if that information's all correct, all of the outputs are going to line up with what the actual cost of the colleges should be. And merit scholarships have nothing to do with your income or assets. That's just going to be based on your students' grades. So I just wanted to point that out, but you definitely want to take the time to do this and don't use a generic list to find merit scholarships. Is there anything before I stop sharing this, Jason, that you want to add?
Now, again, just um, the other thing, you see the private scholarship search tab under member resources there. This, I don't want to get into too much in private scholarships,
Yeah.
but I would say, a lot of parents are like, oh, my kid will get private scholarships. Well, private scholarships are the icing on the cake, not the meat and potatoes of paying for college. The best scholarships, biggest, most, renewable for all 4 years, et cetera, are from the schools themselves.
Yeah.
That's why building a school list is so important.
Absolutely. And also sometimes you're gonna go get, five, $10,000 from a private source, right? You tell that to Vanderbilt, and Vanderbilt's gonna give you five or $10,000 less. So it's also important to understand what impacts those would have. But yeah, good point with that. Here, I'll stop sharing and we can go back to
Yeah.
go back to the deck.
All right. Oh, I have to share, don't
Yeah.
I? Sorry. We're good at financial aid, maybe not so much with technology.
Not tech support.
Are you seeing the right screen?
Yep, the FAFSA.
All right, good deal. Okay, friends. So the FAFSA, this is required at every single school. Okay, so every single college is going to require you to file the FAFSA. Um, and you're going to file it through the Department of Education's website, studentaid.gov. It goes live October 1st of the senior year. Okay, October 1st of the senior year is when it goes live. And again, it's going to pull over your tax returns from the prior year. It's connected to the IRS database. And so, if you got a kid going to college in 27, your 2025 tax returns will be pulled over. So that's why it's so important to plan now if you have a younger kid, so you get the most financial aid possible. Now, if you are in a divorce situation, or a separated situation, only the custodial parent has to file, not both parents. Okay, and how they determine the custodial parent, it's a little gray area, but it's the parent who provides the most financial support. That doesn't necessarily mean it's the parent who makes the most income. So we'll talk through that here in a second because this is one of those special cases. But the procedure is, first of all, your kid creates an account because it's your kid that's applying for aid, not you. Your kid's going to set up an account and get an FSA ID, Federal Student Aid ID. Make sure you jot down the login, the password, the backup code, the security questions, all that stuff, because you're going to need that to get in to file the FAFSA later. So jot down all that information when you create your FSA ID. And then at least one parent is going to have to create a parent FSA ID. And then when you file the FAFSA, the student goes first. They file their FAFSA, and then they invite the parent as the contributor to contribute parental information to the student's application. Okay. All right. Now, the CSS profile is different. Okay. There's about several hundred colleges that require you to file the CSS profile in addition to the FAFSA, not in place of, but in addition to. These tend to be schools that give a lot of institutional aid from their own buckets of money. So they're going to ask you lots and lots and lots and lots and lots and lots of questions because they are giving out so much of their own money. They want to know that it goes to the right person. Okay. And so we always joke, like if you're filling out the FAFSA, you might want to get a glass of wine. If you're filling out the CSS profile, you might want to get a box of wine. It takes a lot longer and it's a bigger headache. But like the FAFSA, it goes live on October 1st as well. Um, and some differences between the CSS and FAFSA. Okay, one is the home equity in your primary residence is going to be treated as an asset, whereas on the FAFSA it's not. Number two, if you're divorced or separated, both parents are going to have to file. Doesn't matter. Okay. Business owners, a lot more questions for you on this one. Now, if you are a divorced parent and the other parent is not, not in the picture, and not available, or they're, heaven forbid, there's some kind of legal reason why the other parent's not allowed to be involved, or so forth, you can request a non-custodial waiver. I should mention that with the divorce cases. We'll go into more depth on this in a sec. But basically, the CSS profile is just a lot more invasive, a lot more questions. It takes some people several hours, and it's very, very invasive. It's just tons and tons and tons of questions. We do that. A lot of these for parents. If you get to the point where like, I don't even want to do this, take it off my plate. We can do it for you. We do a lot of them every year. But one other big difference is, whereas the FAFSA, both child and parent needs an account. With the CSS profile, only the student needs an account. And it's administered through the College Board, which also does the SAT. And so if your kid has taken the SAT or is taking the SAT, that account is what you'll use to log in to file your CSS profile. All right. You want to take over, Murph?
Sure.
Okay.
All right, so now we're gonna dive into all of the special circumstances that we talked about. And first thing we want to talk about are 529s. And it's important to consider from a 529 perspective, first off, who owns it, right? So if you're divorced and the custodial parent is not the owner of the 529, then it doesn't go on that parent's FAFSA or their CSS profile. It would go on the non-custodial profile if the non-custodial parent is the person who owns it. In addition to that, from a grandparent perspective, from
Sorry.
a no, don't worry, but from a grandparent perspective, a few years ago, I think it was 2024, um, grandparent 529s no longer were factored in on the FAFSA. Same with the CSS profile, they do ask a question, but they don't count anymore, right? So it's always important to think, well, if grandma or grandpa owns a 529, first off, I'm not going to report that on the FAFSA. And then second off, depending on how much financial aid we're getting, depending on what our offer looks like, depending on how much money's in the 529, how you spend it down, right? Because the colleges, if you do pay the 529 directly to the school, they do see it, right? They see where it's coming from. So there's definitely some considerations there, but that's a really big planning opportunity now. We even see families, switch and transfer 529s in terms of ownership for strategic reasons, right? And then another thing I want to mention too is another change back the 2024-25 FAFSA year is on the FAFSA, they only ask for the 529 for the student whose form you are filing. They do not ask for the sibling 529. Right? That's a really big change, right? You could have $100,000 in a 529 and have three kids. You used to have to report $300,000, but now you only have to report 100,000 on the FAFSA. The CSS profile still asks for all 529s, total 529s. Now, in terms of trusts, right? If it's a parent-owned trust, it counts the exact same as an investment, right? So investments count 5.64%, and that's exactly how a trust would count. Now, if it's a student UTMA or UGMA, and we get asked all the time, the UTMA, UGMA account, I'm the custodian. Is it my account? Does it get reported as my asset? The answer to that's no, right? It's always a student asset. Now, from a planning perspective, especially if we're before the base tax year, depending on how much you have in that account and what colleges your students looking at, could be good reasons to, consider making some changes. And that's absolutely something we could help with. Now, any student-owned asset counts at 20% on the FAFSA, but 25% on the CSS profile. Right? What that means is if your student has $10,000 on the FAFSA, right, it reduces your financial aid eligibility by $2,000 per year. On the CSS profile, by $2,500 per year. So it's a really, really big hit. Now, when it comes to income, right, distributions, whether it's income from a trust, whether it's, liquidating a UTMA and you have capital gains, all of that counts as student income. Someone asked before, is there an income protection allowance, an income exclusion on the CSS profile? There isn't, right? So student income actually plays a big role on the CSS profile. On the FAFSA, student income is excluded up to $11,510. So there's a little bit more room there, but anything beyond that 11,510 counts at 50 cents per dollar, right? Up to 50%. On the CSS profile, there's no exclusion. So you want to be careful and you want to be mindful about how you're taking distributions, when you're taking distributions, what is the base year, right? What is the first tax year the colleges are going to look at? Because income is the largest driving factor behind all of this, whether it's your income and student income. Now, you always want to think too, and Jason, I think you added this bullet, and it's such a good bullet, and Jason, I think you added this bullet, and it's such a good bullet, but you want to plan for all of college, right? You want to plan for sophomore year, junior year, senior year, and as we are kind of joking, but not really, hopefully not five, right? Hopefully not a fifth year. Because you
Ask me
want
how I know. I have a senior who's just told me he needs to take a fifth year. That's why I had to put that in there.
I
It's
had to add it. I
yeah.
had to add it. Um, but so you want to think because they do make you file for financial aid again and again and again, right? And they're going to look at your income and assets again and again and again, and it could have a big impact sophomore year, junior year, senior year. There's always appeals and there's things that can be done, but plan ahead, especially if you're starting early and you have a junior or sophomore, or well, juniors technically it's not starting early, right? You're kind of in it almost at this point with junior year starting, but sophomore, freshman, you're before the base year, right? You've got some planning opportunities. Juniors have planning opportunities too. And as we've kind of hammered this in, you have to be strategic with the school list. It's one of the most important parts of planning for college from a financial perspective. So, just some helpful tips there. Now, divorced and separated families, first off, it's definitely more confusing, I think, naturally, right? Confusing if you're divorced or separated, this entire process. Who's the custodial parent, right? With the change to the FAFSA and them saying the parent who provides the most financial support in the 12 months leading up to the form being filed, that's kind of confusing and not everyone knows that off the top of their head. And again, you can be strategic with this. And you can also plan ahead where even if you're like the lower income parent, you're not currently providing more support. Well, guess what? Maybe you can make some changes. Maybe you can be the parent who provides the most financial support. It used to be literally the parent the student lives with. That's a lot more straightforward. But obviously this is a really big change. So who the custodial parent is can have a really big impact. It can also have a really big impact if someone is remarried, right? Because at on the FAFSA, you can't leave that new spouse off. If you're remarried, you have to include them. And in addition to that, on the CSS profile, if the remarried parent is the non-custodial parent, the colleges are supposed to exclude step-parent income. But that's part of the institutional methodology. And if they don't do it, you can usually appeal and get them to do it. But can't do that if it's the primary parent, right? If it's the custodial parent for the sake of financial aid. And does it matter which biological parent is custodial? Not necessarily, right? Right. That's again a planning opportunity, and it's something that you want to think about in terms of first off, what's honest and true, but in addition to that, what's going to put you in the best possible light, right? And what's defendable? Always, what's defendable? If you ever get asked a question, you have to know the answer. And there's a lot of colleges, believe it or not, it might not seem like it because some very popular colleges look at non-custodial parent information, but there's over 4,000 colleges. And roughly, what, 200 or so use non-custodial parent information. There's a lot of opportunities to just not even include the other parent, right? And we had someone ask before about not including a parent because they don't want to contribute. Listen, there's some serious reasons you can get a waiver, but not wanting to contribute is not one of them. And maybe an easier solution in that case is to look at schools that don't use their information. A great example of that is a school like Providence or a school like Elon. Um, they're both CSS profile schools that give a good amount of need-based aid, and they don't use non-custodial parent information, right? So there's always some planning opportunities. Now, if the non-custodial parent is completely out of the picture, you're not stuck, right? No contact, right? No support. Maybe there's a court order that says you can't even reach out to them. Then no, you just have to fill out a waiver. You're never stuck in this process. There's always a right way to do this, and there's always a wrong way to do this. And if the non-custodial parent does not complete the financial aid forms and you don't qualify for a waiver, you don't get financial aid. It's pretty simple. I mean, if the college says we need that parent's information, it's part of what we're going to look at to give you a financial aid offer, and they don't provide it, you don't get money. And FAFSA versus CSS profile, it does change the strategy in the sense of, well, if you know the non-custodial parent has super high income, or combined we have really high income, and it's a school that uses non-custodial parent information, college is going to be more expensive, right? And on the FAFSA too, it's always good to think, well, the colleges that use the FAFSA, they don't generally give, tons and tons and tons of institutional grants. It's not always the case, but primarily the schools that use the CSS profile do. So maybe you're not even getting as much need-based aid from the FAFSA schools. But it could definitely change the strategy in terms of how much you're going to qualify for and how you're going to kind of proceed in this process. Now, that being said, it's always the same custodial parent on the FAFSA as it is on the CSS profile. Feel free to jump in at any time. I'm trying to think about anything that's not even on the slide that we should
No,
mention.
no, it's great. You're doing great.
Now, for business owners, we'll start off with real estate. Now, secondary real estate, if it's personally owned and it's not in a business, right? If it's not in an LLC, or if it's not in a partnership or anything like that, unfortunately, it is considered an investment, the equity in it, right? But it doesn't mean you can't take steps to make it a business, which would allow you to exclude it from the FAFSA. And in addition to that, secondary real estate from a financial aid perspective can oftentimes, end up costing you quite a bit of money. It's going to either be on your Schedule E. For some reason, you might file a Schedule C for it, but I doubt it. But it's definitely going to hurt from that perspective. But if you take the right strategic moves now, if you have a sophomore or a freshman, you could put yourself in a better position, given that the FAFSA excludes small businesses now, right, with fewer than 100 employees. Even if it was a business, it would always be included on the CSS profile. But, they're going to treat it as a business versus treat it as just an additional property. In addition to that, you do want to think about what type of property it is. And what I mean by that is if it's a vacation home versus a rental property, right? It's definitely going to be a little bit of a different treatment on your tax return. So you want to be mindful of that as well. Now, I would probably say the biggest mistake business owners make, they overvalue their business. We get it. Like, you're proud of your business, you love it, and it has a lot of value. You're generating revenue. But that's not what you want to think about from the sake of financial aid. You want to think about, if I had to sell this in 20 minutes, what is it worth? And if you are the business, like if it's a consulting, it's zero, right? But if you do own land, machinery, businesses, on your tax return, on your Schedule L, on the business returns, that's going to be reflected, right? So you do want to think about that. You do want to look at the numbers, because at the end of the day, if a college is asking you and they're using the CSS profile, and they're asking you for a business tax return, and they're asking for this information, they're going to see those numbers. It's the same thing with valuing the home, right? They're going to see Zillow, right? They're going to be able to know the year of purchase and the purchase price. They have a lot of information, more than you would realize. Now, in terms of the business section on the CSS profile, you definitely need to take your time. And someone actually pointed out before, and Jason, I mentioned this to you earlier, because every year I'm like, maybe they just accidentally put the wrong line for some of the tax returns when it comes to reporting business income. But no, like they don't account for cost of goods sold when they're asking you for gross receipts, right? They're not taking into account that, well, there was legitimate costs associated with those receipts. In addition to that, on some business returns like 1120S, the instructions are specifically asking for line 20. I believe it's line 20. I don't have an 1120S in front of me, but it's not all of the business expenses. So some of the questions that they ask on the profile, right, from a business perspective, they could be a little bit confusing, but you're going to have to do your best. You're going to have to put the business tax information, and you're going to have to come up either zero for value or some value, right? Depending on your business and if there is land, machinery, buildings, etc. But that's an important section to get right. And hiring a student or a child, right? It could be a great strategy. It could absolutely be a great strategy. It's something you want to check with your accountant if it makes sense. It's something that I would say most business owners I work with, I see them do, not all, but a lot of them. Definitely, 80 plus percent. But that being said, it might not be right for you. It might not be right for your situation. Also, if your student's looking at CSS profile schools and you're going to pay them a decent amount of money, that's going to hurt, right? Income is factored heavily on the student income is factored heavily on the CSS profile. So you want to think about that. Now, we'll talk about appeals in a minute, but if you're definitely thinking about the appeals process, you're definitely, if you're a business owner, there's definitely a lot of things you can appeal. I just did an appeal this summer where on a business tax return, it had, I think the value of the business, I think it's an F, section F, right-hand side of the top part of the business tax return, like $3 or $4 million, right? And Princeton gave this family basically no money because of that. But we were able to say the right things on appeal. It's not easy to convince a school like Princeton to make changes. You have to have really legitimate reasons, but we were able to say the right things on appeal to get the cost down to 40,000. I'm rounding, but around 40,000. And obviously that's almost $60,000 of a difference. So it's huge. And you might be in that situation. It depends on what your business looks like on your tax returns. It also depends on, what you're reporting as value, and also if business income is consistent, right? And business assets and cash, they get reported as part of the value. Again, on your Schedule L from the prior year, it's going to actually list cash. So that'll be there. And this is probably one of the most common things I see families get wrong, which is their thought of planning ahead to lower their income and qualify for more financial aid is putting money into a SEP IRA, right? Or a simple IRA or some sort of business retirement account. That gets added back in, right? So if you're contributing money to a pre-tax retirement account for the business, like a SEP or a simple IRA, that gets added back in as income. Another thing too that a lot of families don't know is depreciation gets added back in. That's whether you're depreciating machinery, equipment, whatever it is, that's on the tax return. That's why the colleges ask you. One of the main reasons they ask for the tax returns to see what losses and expenses they can add back in. Depreciation is the number one thing that they'll add back in. That too is also why when you do some net price calculators, they ask you for business losses because they take that and they add that back in as income. So you always want to think about that in terms of, well, maybe on paper my AGI is 100,000, but we have $200,000 of depreciation being written off, and my students applying to all CSS profile schools that require IDOC in the tax returns. Guess what? That $200,000 is likely to be added back in. And I will say one of the things that we do for families that we work with is we can model those things, right? Because it's not always straightforward. And also sometimes you don't know where to look. We do. But we can absolutely model those things and help you figure out, is any of it going to get added back in? What are the colleges going to look for on the tax returns? Just we know how they look at your information. We know how they read returns, right? Some of our members of our team who work with Jason and myself are current financial aid directors, right? So they do this for a living in terms of taking business losses and adding them back in. But anything you want to add here?
No, that was great.
Alrighty, now home equity. This is another big one. So first and foremost, I do want to say that home equity, how you value your house is going to be really important, but not every college looks at it. The roughly 250 schools that use the CSS profile, a lot of them do, right? But they all treat it to a different extent. Some use 100% of your home equity like Boston College and NYU. Some use none like Harvard and Penn. And then some use a multiple of your income like Georgetown, right? So they all treat it a little bit differently, and it's tough to kind of narrow that down, but how you value your house and what you do in terms of debt against the house is going to be really important. From a need-based aid perspective, the colleges that use home equity treat it the same as a checking account. So they're assessing it around 5%. That's a big deal, right? Especially if you have a lot of home equity and they also use all of it. Now, from a HELOC perspective, if you have a HELOC and you've drawn down on it, please make sure you include that as debt, right? And it could also be something that maybe there's other debt, maybe it makes sense to lump it all together. It could be a planning opportunity and help you qualify for more financial aid at certain colleges. So there's definitely things that we could try to help you figure out in terms of does it make sense? And also from a financial aid perspective, how you would report it on the forms. Now, in terms of appeals in home equity, it's I'd say, a top reason that we appeal. And yes, you absolutely can appeal home equity if the college is using it in their calculation of your family contribution. But that being said, it's not guaranteed to work. And, you know, I'd say that we have been really, fortunately, very successful with that type of appeal, but it just depends on the school. But it absolutely is a reason that can be appealed. And when it comes to estimating your home's market value, we had a question in the Q&A about this before. There is no one size fits all answer. You have to keep in mind the colleges have the year of purchase and the purchase price. And if you bought a house in 2010 for $400,000 and it's 2025 and you want to try to report it as 500,000, they're just going to disregard the number that you give them, right? Because there's no way in that period of time it's only increased, maybe, but very unlikely. Maybe it's something you have to appeal that it's only increased 100 grand, right? They also have access to Zillow, right? And a lot of times, believe it or not, they actually look on Zillow. But you want to be strategic and you want to use the lowest defendable value that if you ever had to appeal, you had backup, right? You had a reason. It wasn't like you just pulled a number out of thin air. You have to always be strategic with this. And you always have to think, if I have to defend this to a college financial aid officer, what am I going to say? And in terms of the best approach to remove or reduce home equity on appeal, there is no one size fits all. I'd say this though, if someone has a job loss and their income goes down to zero, right, you can't access home equity. But in other circumstances too, could be retirement. There's so many different reasons. It depends on your situation. It also depends on the school. You're not going to address home equity on appeal if we're talking to Penn. But they're just going to say it's not factored into our calculation. So you also have to know, are they using it and to what extent? Especially the schools that use a multiple of income. If there's been a change in income, they have to change their multiple. So there's things that have to be done there. It gets a little bit complex, especially with appeals. Talking about appeals, I have to say this. I literally,
Speaking of appeals,
yeah, speaking of appeals, I have to say, believe it or not, it's actually not too late to appeal the current school year. And I don't think we have any 2025s on today's call, but beginning of the presentation, I actually just got an email from a client. They got an extra $13,700 from Boston College. And their student is, obviously just starting their freshman year there, but
yeah.
it isn't too late to
Not,
appeal.
and it's not too early to appeal for next year. I had
Yeah.
a family last week at Denison University got an extra 10 grand a year in scholarships.
And appeals, they're our favorite part of the process. I think they're the most exciting part, because in some ways it's like a negotiation. It isn't exactly a negotiation, but in some ways it is. It's important to understand that financial aid officers are people, right? So you need to have a story, you need to have some background. In addition to that, if you know that, hey, I qualify for an extra 10 grand based on my job loss, right? My reduction in income, tell them that, right? Or if you're like, hey, I just need another 5 grand and I'll say yes to my student going here, tell them that. If you're going to use competing offers, like if you're going to use a better offer from another college on appeal, you can't just say it, you have to show it. The entire appeals process, you have to understand, you have to provide evidence for whatever you're going to say. Whether it's you have $50,000 in medical expenses or you get a better offer from another college, they're likely going to ask you for some sort of documentation. And it's fair to say there's a lot of expenses that are not visible on a tax return. And unless you tell that to a college, they're not going to know, right? So you have to address any additional expenses you have going on in your life, whether it be elder care or medical or whatnot. directly with the colleges. And it takes follow-up, right? It takes being persistent. Been in the middle of an appeal with Barnard for like 5 or 6 weeks now. You have to go back and forth sometimes. You have to make sure your student is demonstrating interest, how badly they want to go there, how badly you as a family want to make this work. You want to follow up. It's good to have a student involved in the process some way or another. From a merit appeal perspective, they should absolutely always lead communication and outreach. If the appeal is that you lost your job, the student shouldn't be the one addressing that. So it really is specific to the type of appeal, but it's always good to have them involved. Even in a circumstance like that, it's good to have a quick little paragraph from the student about how badly they want to go to the university and how hard they worked in high school. And lastly, you always want to try to get the appeal done before the deposit is paid. I just gave that example with Boston College, and yes, of course, there's still some opportunities to appeal later on, but you do want to do your best and kind of try extremely hard to have that final number before you pay an enrollment deposit. It gets a lot harder after that.
Yeah, don't commit yourself until you get a lower offer.
Yep.
All right, well, we're just about out of time here, but as I mentioned at the beginning of the webinar, we got to a lot of the questions. We answered over 40 questions, so that was good. But if you have, you want to talk to us, we're happy to offer you a free 15-minute consultation. Here's a QR code. You can just, take a picture of the QR code, that'll send you to the landing page. We can also put the landing page in the chat. Murph, will you drop that in there?
Yep, I just did.
Okay, so there's a landing page there. You can book a consultation with us. And then the other thing I want to do is let me stop sharing, or do you want to share the landing page with?
Yeah, sure, I have it up.
Okay, great.
Yep. Okay. So you'll be able to see here that you can obviously book a call with us, and we'll definitely talk through your situation. We'll try and see if there are any opportunities that we can help you with. And are you going in the right direction? Are you not? And please don't think that if you have a high school freshman or if you have a sophomore, it's too early to talk to us. The earlier someone talks to us, and it's always hard. I think just as humans, we wait a little bit, right? But the earlier you start this process, the earlier you have those initial conversations, the better off you're going to be come senior year.
Every
Um,
every parent of senior I talk to, they say, I
I
wish I had
wish it
started
started
this.
earlier. Everyone says it.
Everyone.
Um, and we should have someone on one time just to share that, like, I
Yeah.
wish I started earlier. But anyways, so you can see I know it's a Saturday, we don't have any lives. So we will be available to meet with you today until roughly 4 o'clock. Take us up on this. You do have to schedule it by midnight tonight, right? If you do want to have a free consult with us. In addition to that, especially for the class of 26, maybe you need to jump right into it, right? Maybe you want our help. We do have our service packages that we offer, and we can talk about those on the call too. But also, it's not too early to start with us if you have a 29 or a 28. A lot of what we offer is unlimited. And then in addition to that, we understand that some families are DIYers. I would say in a circumstance with business owners, divorced families, DIYing it gets a little bit more difficult, only because of the complexities, especially when we're dealing with CSS profile schools.
Yeah.
But if you are a DIYer, we do have MyCap Premium, which would give access to like the private scholarships that Jason talked about earlier, unlimited schools. We had someone say that they couldn't add more schools earlier. You just have to obviously sign up, pay the $5 a month, and you get unlimited access. And then at some point, normally I would say tomorrow, but given that tomorrow's Sunday, at some point, probably in the next few days, you'll see the recording here from today's presentation as well. Someone asked if there's anything that they can share on the next webinar, right? If you ever want to like get information on our webinars or anything like that, we've got a great support team. You can always write in to support@collegeaidpro.com if you have questions or need a link or something to share with a friend. But anyway, so please take us up on the free consult. Also, if you feel like you're going to need our help to navigate this entire process, feel free to look through what we offer. And then if you're the DIYer, right, get started today. We do members workshops every other Thursday. right? We just did one this week, so the next one will be in a couple weeks, but it's really engaging. Obviously the DIY approach, you're kind of on your own to figure out the numbers, figure out the circumstances, all of that. But that being said, we understand that that is the approach some families want to take. Anything you want to add here?
Yeah, I'll just say, talk to parents who have gone through this. If you're, wondering what it's like if you have younger kids or whatever, but it's stressful. It's a confusing, complicated system. I hate it. I hate the system. And these colleges are big businesses. Even though they don't pay taxes, they are big businesses, and they're trying to take every dollar they can get from you. And I hate to put it that way, but I'm the former dean that spills the beans. I was paid to make money. And every college president and vice president in this country is paid to make money. And so we are advocates for the families because you need to have somebody on your side that knows how to navigate all this stuff, or you're going to unwittingly make mistakes and overpay. Not because you're doing anything wrong per se, it's just it's such a complicated system. So if you know what you're doing and you got plenty of time and you like this stuff, man, $5 a month is an amazing deal to DIY a whole college funding plan, navigate the system and so forth. But if you're also like too busy, you're a business owner, or it's confusing and complicated, there's big money on the line and you want some help, we can give you help. It's a full service package. So it's a little bit of an investment, of course, but it pays dividends hugely in the long run, not just financially in ROI, but taking it off your plate is such a huge stress relief for parents. So basically, my point is you have options with us. If you want some help with all this, we got a DIY, low cost DIY option, and we got a full service option for those of you who just want to outsource it to experts and say, get it off my plate. So
And I
talk to
think
us,
it's
talk to,
important to,
yeah, sorry, I was going to say, just talk to us and see, what does it look like? What's our best option?
we're very direct in terms of if we think you should DIY it or if we think that you truly would benefit from some support.
Yeah.
And it's all about how much can you save, right? What's the ROI that we can provide you? And really, will it make a difference? Will it not?
Yeah.
Um,
Yeah. If your kid wants to go to Penn State and is not playing anywhere else, don't hire us. Because
well, I mean,
you're not getting a penny of aid.
you're not, but you might want to talk to us about loans because
Well,
Penn
that's
State's expensive. But
yeah.
no, like there are certain schools that just really don't give anything. And if there's no, in that situation, if you don't want to spend $63,000 a year, we want to help you build a school list and find the colleges that are going to be affordable for you. But yeah, no, it's a really good point. There are literally some schools that just flat out don't give anything. Kind of is what it is. Someone asked to share the QR code. Do you want to share that one more time before we go?
Yeah, sure. We can leave it up there for a
And
second.
the QR code just leads to the landing page, everyone. So you can just click on the link in the chat. But for anyone on their phone, it might be easier to screenshot the QR code than um, to grab a link from the chat.
Yeah. Hmm. All right. Well, hopefully this was helpful, everybody. We have to end this now so we can jump over, shift gears, and start talking to parents who have booked consultations with us. Hopefully this was helpful.
Yeah,
Um, again, if you want some help with anything, reach out to us. But also one more favor to ask is please share this. This came up in the chat. Someone said, I'm going to share this with other parents I know that need some help. So please share us our information. You will get a recording of the webinar. Feel free to forward it to other parents that you know who are going through this process. And we'd love to help you if you need some help.
yeah, absolutely, everyone. I hope you have a good rest of your weekend.
Take care.